Frank, good morning. Frank and Frank. Robert Frank's going to be jealous.
That's right.
Great to have you here. All right, we're going to hit the charts right now. The first thing we're going to talk about is the S&P 500, actually below its 200-day moving average. We're showing it right here. So you saw not too long ago, back in February 19th, we hit our all-time high on the S&P. Now we're down here. I mean, it seems kind of obvious, but tell me, what are the trends that you're seeing here?
Thanks for having me. Well, I think we should look back at the last two times the S&P went underneath the line to get an idea of what was going on here. So that was October 2023.
Okay.
S&P was down about 11% over 3 months, this time over 3 weeks. And so that led to, of course, a very strong rally, which lasted for many months.
Right.
So not too similar just yet. Before that, January 2022. As we know, market was coming back from the COVID lows, so almost 2 years of uptrending action, just like we have here. And the first time that the S&P went below that line led to a strong rally, which failed. Failed here, failed here, failed here, many times. And then we had to wait all the way until March 2023 to see a change. And what happened back then was that we finally saw volatility come in, bullish patterns start to work. So in terms of what we can expect now, it's tough to make a decision when it's going to happen. We need those same characteristics to then start to develop again.
If we're talking technicals, these are areas where the market saw resistance, these different areas right here. So up here, where's the area of resistance for the market? What level should we be watching?
Well, right now, 200-day moving average is right around, we can see here, 5,700-ish or so. The concern is this, is that if the market continues to roll over, that moving average will roll over as well. So the worst case scenario is having an index, for this matter, trade underneath a declining 200-day moving average, as we saw here, which was really resistant the whole way down during that bear market.
All right, we're going to move on. Frank, clear that screen for us. We're going to look at communication services. Meta is a big part of that right now. What trends are you seeing when we come to communication services, like a lot of other parts of the market, hit that high over here, and now we're down here?
Right, so this now, to me, it looks like a bearish pattern. This is a classic head and shoulders pattern, right?
Okay, what do you mean by head and shoulders? For the audience that's not into technicals.
I will show you right here.
Okay.
This is the left shoulder, head, right shoulder, bearish pattern, right? And so as we go through this, this looks like it's about to roll over. So you take a measured move from the top of that head down to here, gets us down to about 85. So a pretty strong move. This would be about 20% from the high.
So a clear bearish signal in your mind.
Right. Now, sometimes the biggest patterns don't play out all the way. So a best case scenario, if we see a downside break, which then fails here, comes back up, this is a bear trap. So that means going higher. Now, worst case scenario, of course, go here, fail on this level. So one scenario to keep in mind is that Meta and some other names, of course, reporting in 3 weeks or so. So if we do end up, say, around 90 or so, the rubber band can be pretty stretched to the downside and instead of a pretty strong bear market rally at that point.
So it would be a bear market rally, but it wouldn't be a clear uptrend.
No, we still have to wait for characteristics to change. The volatility is still fierce. That some of these bullish patterns we were looking at up until the end of 2024 have been wrecked at this point, so it had to be rebuilt.
Frank, go ahead and clear that. We're going to get to one part of the market, or at least one name in the market that seems to be working. Tell us what you're seeing when it comes to this chart. We're going to show it right now. It's actually eBay. Right. We're showing it right here. So we're actually tracking it from all the way back in February of 1st of 2024, so a year plus. So what are you seeing when it comes to this name?
Sure. Well, this is an uptrend as much as we can see going back here. I was looking more to this side because think about what's happened here. The rest of the market's rolling over. XLY, consumer discretionary ETF, of which this is a part of, getting hurt as well. eBay really stands out. You can tell that it's getting closer to potentially testing its highs. But I think the key part about this is we know that gold and silver, for instance, safe havens are doing well. But if you look closely, we can find areas that are outperforming even in the worst performing sectors. So eBay is one to watch over the next few weeks.
Very quickly, clear it one more time for me. Very quickly, though, we've got to get going, Frank. Why isn't this that head and shoulders you were talking about? Why isn't this area right here the same thing?
It could be close. But I'm looking at, of course, the longer-term trend at the same time. So if you go, say, below 61, 62, this uptrend, right, and this has more of an uptrend as opposed to the XLC, that'll be something to keep in mind.
Another Frank and Frank. Frank Cappelleri. It's always a pleasure to have you here. Thank you so much.